Digital assets are reshaping the future of payments and remittances. Hi everyone, I'm Mirela Ciobanu, lead editor with The Papers, and we are live at Money 2020, where I'm about to speak with Naveen Mallela, global co-head of Kinexys by JP Morgan. We are going to find out why the world's largest financial institutions are doubling down on digital money. For those that are not familiar, what is Kinexys by JP Morgan?
Kinexys, we've rebranded Kinexys from Onyx late November last year. Kinexys and Onyx was fundamentally about rewiring financial market infrastructure. It's about rewiring how information, assets, and money move and how they can come together in novel ways, in ways which they don't do today, creating net new capabilities and net new products.
So, in a way, what challenges in payments it aims to solve?
Payments, domestic payments have come a long way. Almost most countries, you have 24/7 payment infrastructure, domestic payment infrastructure. But cross-border payments is where all of the opportunities are right now. So how do we bring the same experience of domestic payments to cross-border payments? How can we really make money always on? How can we make money 24/7, money programmable? How can we make cross-border payments instant? Those are some of the problems that we've been looking to solve from a JP Morgan Kinexys standpoint.
Yeah, let's talk tech for a moment. The solutions that Kinexys is building are based on blockchain technology. So how does blockchain-enabled payments infrastructure actually work?
Yeah, so what Kinexys is doing is about bringing programmable, shared, multi-asset ledgers into the bank, into financial institutions. So what that means is that like if you look at the financial architecture of today, every bank has their own ledger. And even within a bank, there are multiple different ledgers. Asset sits on one ledger, cash sits on one ledger. So there is just like a proliferation and fragmentation of ledgers. And then you have Swift as the messaging infrastructure, which coordinates all of this. Like that's the architecture of today. So a simple payment, right? Like a simple payment, even domestically, at least involves three ledgers. There's the debit, there's the credit, and then there is the central bank ledger on which these ordering bank and beneficiary banks settle. So bringing all of this onto one single shared ledger will unlock net new capabilities. It will make money instant, settlements, what we call atomic, debit credits happening together. And once you overlay things like assets on top of that, it creates net new capabilities. Assets, money, information, all coming together to create unprecedented capabilities for financial markets.
You are mentioning now network capabilities. Who can be part of this initiative of Kinexys?
So right now what we offer Kinexys to is like a considerable franchise of our institutional clients. So on Kinexys, we have some of the largest financial institutions, we have some of the largest corporates, we have fintechs, which is why, I'm here. We have broker dealers. So across every segment of institutional clients, we have anchor clients for Kinexys. And that's really the focus of Kinexys, bringing to our institutional client base the next generation of financial services.
So since you are mentioning so many players, now I'm curious from a geographic perspective, who are champions in adopting digital money solutions? Yeah, what types of companies are more visionary when it comes to adopting these new payment rails?
I think these are still very early days when it comes to large-scale adoption. Clearly, there's a lot of excitement out there in the US. In Europe, digital euro has been talked about for some time. Stable coins and digital money in Asia is also gaining momentum. But what we see from Kinexys, and again coming back, which is why I'm here at Money 2020, like some of the most eager adopters are fintechs. People who require high-speed money movement, instant money movement round the clock, are institutions whose business is money. Like if you think about corporates, for example, corporate treasuries, money movement is interesting, but it is not the core of what they do. But if you think about fintechs, if you think about banks, money movement is the core of their business. It is those institutions who are the most keen on what we do with Kinexys and are the keenest partners of us.
And in terms of geographies, yeah, where are most champions based?
I do think that Asia, where I'm based, continues to be exciting simply because the challenges are immense in Asia, because you have like so many different countries, so many different currencies. Asia, like unless you truly are there, you don't understand the degree of fragmentation. Well, Europe also is vast, but Europe has Euro, Europe has SEPA, it has unifying currencies and unifying payment infrastructure. That's not the case with Asia. So there's a lot of activity in Asia. I don't think anybody's ahead. As of now, what I would say is that it's still very early stage, but the opportunities are significant, I would say, in Asia.
Yeah, and since we mentioned digital money and we talk more about, let's say, the technical aspect, blockchain, what can you tell us about your view on, stable coins, CBDCs, all these initiatives, projects?
I just generally do think that it will be complementary. You have central bank, like if you look at money today, you have central bank money, commercial bank money, e-money.
Yeah.
All of them work together and there are different use cases. I think going forward as well, things like commercial bank money, like what we're doing with blockchain deposit accounts, tokenized deposits, CBDCs, stable coins, they will all work and there will be use cases each of them are targeted for.
Yeah, in a way anticipated my next question because you mentioned that we are in, so a few questions. You said we are in the early days when it comes to blockchain, but now you mentioned about this idea of all these solutions working together. So if we are going to make predictions for the next 10 years, what do you think the payment rails of the future will look like?
I do think that the payment rails will not just be purely payment rails. The payment rails of the future will be based on universal ledgers. Like bank-specific ledgers will go away. It will be based on universal ledgers and multi-asset ledgers. There will not be pure money ledgers or asset ledgers. It will be multi-asset, it will be programmable, and it will be universal. That is the future rails, not just of payments, but that is how we think that the core of financial market infrastructure is going to look like.